up?
How are you doing tonight?
I'm all right.
Yeah. Good. You here for credit scores and reports?
Yeah, but to be honest, I might leave.
It's okay. The weather is really nice. None of us really want to be here.
Yeah.
Here's some info for you.
Okay. I've just been studying for a long time and I am hungry. If you don't mind if I just eat these a little bit.
Not at all.
Are we starting soon?
In a minute. Yep.
Okay, cool.
Mhm.
How long is it supposed to last?
About an hour.
45 minutes, maybe?
Oh, okay.
Yeah.
We'll see how fast we go with.
Yeah.
It'll go faster. No,
I have a lot of questions, yeah.
I shouldn't say no, but if you have questions, you can ask, okay?
All right.
We won't ask you if you have any.
All right.
When we planned the program, it wasn't this beautiful out. We didn't think that it'd be so nice. And yeah.
Oh, that's all right. Yeah. You know what? You can tell I'm already like halfway in, halfway out because I'm sitting in the back. If I was all the way in, I'd be sitting in the front.
You'd be surprised. A lot of people like the back row. But.
Yeah.
Well, I think we will go ahead and get started. Welcome, everyone. We do have an online audience as well as in the crowd here. So this program will be recorded and available on our website and our YouTube page. But welcome, everyone, tonight. We're here to learn about credit scores and reports with Forward Bank. I'm going to go ahead and pass off.
Thank you, Maida. I'm Leisha Austin. I am a mortgage lender at Forward Bank. I'm here with Dave Krause, who's one of our commercial lenders who will be presenting tonight. Goals of the workshop, are basically because credit scores can have a big impact on your life in so many different ways, and that the credit reports are a snapshot of your financial well-being. So whether it be for cell phones, loans, insurance, credit cards, and other uses, I'll get a sense of what your credit worthiness is from your credit report. So we want to explore with you, whoops, I gotta hit this, don't I? Explore the importance of credit scores in the reports, learn how to access the information about your credit score and report, discuss the strategies to improve credit if that needs to be, and identify how your credit from incorrect claims and fraud can be affected as well. So I guess the big question is, how well do you know your score? Do you know it exactly? Do you have a good idea? Don't know? Don't know what a credit score is? It really doesn't matter. We'll talk about all of the nuances of the credit score. So what is a credit score? It's a 3-digit number rating that tells a lender how likely you are to repay a debt or the ability to repay on whatever model you're deciding to use. And there's different levels of the credit score. The slide breaks it down as less than 579 is poor. Poor is poor. You need to do some credit repair. You need to do some work to get that score up because you're more than likely not going to get granted credit. Even the fair area, the 580 to 669, I guess I would say I'd push that. Yes, sir.
When can we ask questions?
When would you like to?
Right now, I have one.
Okay.
What is it possible to have no credit score at all? If
Yes.
you never did anything?
Absolutely. Absolutely. And having no credit score at all is better than having bad credit, but you can run into the same obstacles and not being able to get credit
Right. And
by having. We'll talk about that in just a little bit, how to build a credit score.
Okay, one more question quick. Where does it start off if you just start, or does that vary?
If you just took out credit?
If you just begin to establish credit, does it always start at, say, whatever, 590 or?
No, it doesn't necessarily start at the 590, but they'll call it a thin file. And if it's a thin file, your score is going to be affected. It's going to be lower, but you're not going to be in the poor area.
Thin file meaning you just don't have much history.
Correct.
Okay.
Correct. The fair bracket from 580 to 669, I guess I would even bump that lower than the 669. In our experience, anything really under 640, especially under 620 in the mortgage world, you're not going to get a loan. So I wouldn't call it fair. It's still on the poor side where you need some major work. The 670 to 739 is a good score. You can usually get the credit you're needing as long as everything else falls into place, like your debt to income ratio and all of the other things that go into it. But you will pay a higher rate for credit with the score in that bracket. Once you hit the 740 to 799, you're in a good bracket, a very good bracket. And your price for borrowing tends to goes down from where it was before. Not quite as good as the, over 780, I would say, not so much the 800, but it's a good solid credit. You might have a shorter credit history. You might have maybe a blemish on a thicker file, something like that, but it's a very good score, and it can be affected by many different things. So strategies to build your credit, having no credit. You can open up a line of credit, which would be like a credit card, a revolving line, something like that. My words of advice on an open line of credit is make sure you don't abuse the open line of credit. Make sure that you're only utilizing about 30% of that line. So for example, $1,000 line of credit, don't ever owe more than like $300 on it. Pay it off monthly if you can, use it regularly so you get a payment history. Dave will talk a little bit more on the credit report and show you how it reports when you make a payment and an on-time payment or when there's nothing to be reported. So it's important to have credit. Oftentimes we'll tell a borrower, go, get a small line, use that credit card at the gas station and pay it off every month. Even if it's a small line, something like that, just to show your credit history. Request that your payment history be reported. That could be like for your landlord or your utilities, but know that because you ask them to doesn't require them to. Not everyone does report. Opened a joint account, which it says optional. What does that mean? A co-signed debt. A family member, somebody like that who believes in you and knows that you can, you're going to repay, will sign with you. They're as responsible for the repayment as the debt as you are, but it reports on your credit report showing that you have credit and that you are making payments on time. And most importantly, pay all your bills in time and in full and never miss a payment. It talks about a scenario here where Anna and Bella have been friends since middle school. They're both single, but both have steady incomes to pay their bills. Anna and Bella decide to buy their homes in their childhood neighborhood. Bella receives a loan without any trouble, but unfortunately, Anna has a difficult time of getting a loan. When Anna finally gets her loan approved, her interest rates and insurance premium are higher than her friends. Why do you think that happened to her? Well, there's several reasons that this could happen to her. One could be their credit scores. The other could be how much down payment did one put in over the, or what percentage of the down payment did she put down over the other? That has an effect. What loan type did she get? Did she get, a loan that's for a first-time home buyer that gives a better rate because she qualifies? Does her income qualify for a first-time home buyer rate, which gives you a better rate? There's a lot of different things that can affect that, along with the fees, along with the lender that you choose. It could be an ARM versus a fixed as well, and that could affect that rate as well. So when it comes to credit bureaus, so much depends on your scores. How do they come up with the scores? Well, there's 3 major credit repositories in the United States. There's Experian, Equifax, and TransUnion. So those are the 3 majors that contribute. Lenders and cell phone companies and utilities and other people who report to one or all of those. As a bank, we report to all 3. This was what builds the information in your file for a score to be generated. Many different agencies use those credit scores, and so you wonder, how are they calculated? Well, first of all, a credit score isn't a credit score isn't a credit score. I call it a black box. There's a black box that's formulated where different pieces of information get dumped into, and it's to form the probability of repayment. So if it's an insurance credit score, how likely are you going to repay your insurance? If it's a car dealer, will use a different score than what we may use at the bank, because they're looking at the ability or probability that you will repay your car loan. As a bank, we look at your FICO score. It's a Fair Isaac score that incorporates a lot of different things into it. And it was originally built for mortgage, to how likely is somebody going to repay their mortgage? And if they're going to repay their mortgage, they're more than likely going to repay more. So that's the score that most banks do use. But again, there's other multitudes of them. How do they, what goes into it? The amount owed, typically 30 to 40% of it, of the weight of the credit score comes from that. The payment history is 35 to 40%. So those top two, the amount owed in the payment history, are the two most important components of the credit score, along with the length of credit history. So like you were asking before, what if I'm just starting? That's a piece of it, but it only takes up about 15% of that credit score in most cases. New credit is another 10%. That could be positive or negative. If you're applying for credit all over the place and trying to get a whole bunch of new credit at one time without it performing, it's going to affect your credit score negatively. And then types of credit, is another 10% approximately. They're looking for a mix of credit, whether it be lines of credit, car loans, mortgages, various different types of credit make up that 10%. Different weights are put on, different ones of those components based upon the type of credit score that you're looking for. So whenever you get a score too, you'll always be given 3 reasons why your score isn't the perfect score. I don't care how good you are, you're not going to get that perfect 850 if that model says 850. If you go online and you pull a TransUnion score, you'll get the Vantage score. That's not going to be the exact same score as your FICO score, which isn't going to be the same exact score as your Equifax score, which isn't going to be the same exact score as your Experian score. In the mortgage world, what we do is look at all 3 scores and take the middle score and look at that, and that determines your rate and terms that we can give you. If you're married, we look at the middle score of the lowest middle score. So husband's middle score is 750, wife's is 730. We would look at the 730 for credit. Costs of co-signing. So we talked about, having somebody sign to help you build it. Anna just bought a new house, but is further away from work than her old apartment was. She needs a new way to get to work. She'd like to purchase a new car. She has taken some steps to improve her credit and now is eligible for a car loan. Anna wants to use the loan to get a new car, but she has a problem. Someone needs to co-sign. She decides to ask her friend Bella for help. Should Bella co-sign for her? There's no right answer. It could, I guess the big important thing to know about co-signing loans is when you co-sign, you're as responsible for that debt as the person who's signing it. They perform well, they make their payments well, it could raise both of your scores. If she doesn't make her payment on time, it's going to affect your score. And a lot of people have this false image of, if I co-sign, I don't have to make the payment. Well, yeah, you do. Or it's going to show up on your credit report, and the creditor is going to be coming to you to make that payment. So it's a yes or a no, depending upon the scenario. It could help them both. It could hurt them both. So it's it's a judgment call. Should we co-sign or not? So with that, I'll hand over to Dave, and he'll talk about what's in your credit report and how to read it.
Okay. Well, thank you, Leisha. Again, welcome this evening. My name is Dave Krause. I'm a commercial lender with Forward Bank. I've been there for about 17 years. As Lisa mentioned, anywhere in the bank, we use credit scores and credit reports. So one of the things I'd like to touch base on is there is opportunities to get let me see if I get this right, to get your free credit report. By law, you're able to annually get a free credit report. There is a specific website. You'll see a lot of spoofed websites and a lot of websites that will take you to like freecreditreport.com or getyourcreditreport.com, and they'll charge you for it. If you go to the www.annualcreditreport.com, once a year, you can get your free credit report, and they'll actually send you a copy of that, and they'll give you each report, and each report will be a little bit different. The formatting's a little bit different and so forth, but you want to do that every year because it allows you to review that report, review it for fraud, review it for any errors that you need to, dispute, to get fixed, to talk to the banks and so forth. So there are some other specific areas you can get a free report. If there is reported fraud, by virtue of that, you get a free report. If you have to apply for welfare or public assistance, you can get a free report. And then if you're denied for a loan, and when we deny a loan for whatever reason, many times it's because of a credit score, we send you a letter. By virtue of that letter, there's an address and a phone number, a website on that then you can get your free credit report because you've been denied, and you can go in and actually see what it is. Most lenders that we've found and that I've worked with are very open now about sharing your credit report. They'll actually sit and show you during a meeting or whatever, here's a report, this is what I see, these are the issues and so forth. So try not to make it a secret. We try to take the cover off of it a little bit and share what we're seeing out there. So getting your credit score is different than getting your credit report. And that's very important to understand. So when you get your free credit report, you're not going to get your scores. Those scores are proprietary to the organizations, to TransUnion, Equifax, and Experian, and they will charge you for that. Okay, so they're going to charge you to get your credit scores. Now, if you're like me, if you have a credit card, my credit card company allows me to access my FICO score pretty much anytime. I can pull it up right now. Forward Bank, for instance, on our app, we have an ability to go in and look at your credit score if you're a customer of the bank and you just enroll for that. You can go out there at any time and, again, get a credit score off the app. So there's all the other places. If you have a credit card, typically your credit card company, if you're on their online site, they'll give you that. If you get like Credit Karma, if you use like some of the tax preparation programs, they have avenues there that, sister companies allow you to get your credit reports and your credit score. So there's a lot of other places you can get it. So if you need to get it, there's places you can get it for free, just so you know that. So
sorry, what's the difference between the score and the report? The score is just a number, the report is...
Exactly. The difference between the score and the report. Exactly. The report has all of the information, and I'll show you a report here in a second. And then the score is the mathematical amalgamation of all that information, and then your risk. So
they not give you the score?
Because they want you to pay for it. It's money. Bottom line, it's their number, and they want you to pay for it. So I'm going to show you a report now, but I'm going to ask for some technical assistance in order to flip over to that. I don't know if Maida if she's available. Okay, here's the report right now. Hopefully you can see this. I think there's a copy in your handouts as well. So when you go, and this is specifically a TransUnion report that I have here. TransUnion in this area is probably the predominant report that banks use. It's been in Wisconsin, the one that we use mostly. So when you get your copy, you want to take a look at this thing really from top to bottom and make sure everything's accurate. So let's kind of work through it from the very top. Up in the very top corner, it'll tell you, the subscriber, who's ordered it and so forth. But going down, it'll have your name. And then it'll also known as. So we see this in women mostly. They'll have a maiden name and a married name on there. So you want to make sure that's correct. Social security number, date of birth, a phone number, and when your file was established. Now, we'll see many times like a phone number won't be correct because it's only what's been reported into that. And their information here is like when I'm requesting a credit report on somebody, I can type that information into my request and then they'll carry it forward to the report. So if someone mistyped it or whatever, not real critical that's not right. Social security number, absolutely you want to check, and you want to make sure your date of birth is correct. Going down then, they have a line for addresses. And you notice in this case, they have 3 addresses, the current address and 2 previous addresses. So again, make sure your address is correct. Previous addresses aren't so much, but that is addresses that credit has been reported to the agency under, places you've lived in the past. Like when I moved around when I was younger, there was probably 6 addresses there because I lived in Illinois for a while, and Missouri and Wisconsin. So they would add those addresses in there. Again, employment, that is typically put in there again by whoever's requesting it. We have a spot where we can put in employment. It doesn't always happen, but it'll put in a position and so forth. Again, not real. It's more demographic information. If there's error there, you can correct it, but it's not that critical. Going down further in the middle, alerts and special messages. Now, this is an area that In this case, because this is a sample, you see an alert there saying that the input doesn't match a file input or the social security number doesn't match what's on file. They will actually be able to access and make sure that it's a real social security number. And these are alerts and fraud alerts that we like to look at in the bank. Some of the things this will tell us is if there's fraud reported, we can actually identify that and help you. Because we look at those alerts and we actually have to review them and document that we've reviewed them. But we see, is there a fraud alert? The OFAC name, that is the Office of Financial, I'm going to get it wrong, so I'm not going to try to repeat the acronym. But they're looking for really, money launderers and crazy stuff like that. We don't see that very often. And then there's an opportunity to put a consumer statement in that. And those are usually down at the end. Then you get to what the important part is. Okay, right below that alerts, that's where the score will show up. And in this case, we have a score of 590 and then a bankruptcy model of 533. So they calculated it two different ways, but you can see the reasons that they actually list there, the reasons on why it scores what it does. In this case, the Vantage score would be what I would consider their credit score of a 590. And then it tells us why is it a 590? Because they've had delinquency, there's no real estate accounts with an amount. They had revolving account delinquency, no installment accounts. The bankruptcy, they list reasons there as well. It doesn't score as high. So that's an important thing to look at. It gives you at least a basic understanding of why aren't I an 850 or whatever. And I have to go back, every company has a different maximum number. Equifax's number is one thing, TransUnion's number is one thing, and Experian's number is one thing as well. So, but that's where your score will show up on the report. Then the step below that, they'll have the just the aggregate amount of all of your credit. So in this case, the person has, if you look at the information, their history, they have two public records and a collection. What is a public record? That's anything that has, you want to go to that? So a public record in this case is they had a bankruptcy that shows up there, the first line, and then they had a judgment. So if people have bankruptcies and judgments, those will get reported into the credit report, and you'll see them here, and it'll actually tell us the date, the dollar amounts, and so forth that's out there. So, and this is one area that if you have a name that is a common name and a similar name, it's not real common, but it's not uncommon that this may be misrepresented, that they may have picked up someone else's name and applied that judge, especially we see it in judgments in smaller community, in rural communities and so forth, that judgment may not be on the right report. Not infrequent. That's something you really want to take a look at closely. This person had a collection, and this one, it shows their collection, ABC Bank. A collection would be if you didn't pay your bill and you were sent to a collection agency. Most common one we see here is medical collections, and that's the most common one everywhere, not just in Marshfield, but that's everywhere. My understanding, however, is that they are reevaluating credit scores, and they will be reducing or eliminating how medical collections specifically are viewed as far as credit scores go, because there's an understanding about medical bills and insurance coverages and those types of things, and how difficult it is sometimes to afford those. And Lisa, you may correct me if I'm wrong, but I thought they were going to take that out totally. They may still list them, but they wouldn't include them in the calculation of credit scores.
Fannie Mae is doing something with it as well.
So Fannie Mae is doing some of that, yeah. So they recognize that it's a problem, and they don't want to cause someone not to be able to get credit because they had a medical collection and some disputed thing that way. So, but always look at those. If you see an area that's not correct, again, there's ways to report that, and we'll talk about that here in a second. And then the next section is really what we refer to as the trades. This is everywhere that you've owed money in the past. So this is your credit cards will be listed there, your car loans, and your mortgages typically. So let's look at the first one specifically, just so you kind of know, if you get your report, you know what you're looking at. I think that's really key, so you understand that. So the first line here is called the ABC Bank, and it shows an account number. So you want to make sure that's really your account number. That's the account number that you've been using at your, at the bank. This is, an automobile loan specifically. The responsibility, what I means is that's an individual. You'll see a C is a cosigner, a J is joint. So you want to take a look at that. So this is to this individual specifically. The high credit, that shows what the original loan amount was. In this case, it was $16,900. The balance was $12,900. And that we report monthly, and I don't know what day we do specifically. It's not always the end of the month. The numbers, if you look at it, sometimes they won't be exact. If you pay your credit cards, the numbers may be different based on the reporting dates. But in this case, they show a balance of $12,900. It opened on 8/05, so it has the opening date. Remarks, account in dispute, so there's an issue here with this account. The terms, that's basically your payment terms. In this case, it's 60 months or a 5-year term, and your payment is $282 a month. Now it shows a past due amount of $1,128. So this, by ABC Bank, has been reporting that this account has been past due, and that's the aggregate amount that's past due. And then they break out those payments. If you go down in the bottom left of that line, it says late payments, and they've had 20 months of reporting. So that tells me that the account's been open 20 months. They've reported 1 times 30 past due, 1 times 60 past due, and 5 times 90 days past due. Now, I want to point out, when we talk about late payments, many times your loan will carry a late charge, and those generally go into effect between 10 and 15 days after your due date. Most car loans are 10 days. Credit cards are 10 days. Mortgages, I believe, are 15 days. That is not the same as a late payment here. Here, it's only if you're 30 days past due. So if you go 30 days past your due date, that's when it gets reported. So if you're 12 days past due on your car loan and you get a late charge, that doesn't show up here. You have to be 30 days past due. So that's kind of important to know. So it shows, the maximum amount, the amount that it was past due, and then the payment pattern over on the far right. In the last 12 months, it shows you that this person in months 13 through 24, the ones mean it was paid on time. And then you kind of count it backwards from left to right on that top line. It goes 1, 1, 1, 1, 1. So those are all on time. 2, all of a sudden they missed, then they're 30 days past due. 3, they're 40 days or 90 days past due. 60. 4 is 90 days past due. And then they're starting to catch up a little bit. And you see if they make those payments, it'll go from 4 to 3 to 2 to 1 and then back down as it's caught up. So important to look at that. If you know that, hold on a minute, I've been paying this thing on time, something's not getting reported right. So that's where you want to go back to the bank and say, hey, I got my credit report. It looks like you're misreporting this. Here's all my documentation that I've made all these payments on time, but on here it's showing up wrong. So if you go down to the second line, this is a credit card, very similar to the top one. And just point out here that the payment pattern on the bottom left, it's all ones. So over the time, the last 24 months, you've paid everyone on time. Good to know that way. So one of the things Leisha mentioned when they calculate the scores is the amount of credit you've used. And this is a good example here on this credit card. Your limit is $16,700. Your balance, when they reported it was $5,200, and your high credit was $9,600. That's pretty good, okay? Because you haven't taken it to the limit, and you've got it paid down to about 30% of what your max is. And what'll impact your score is if you see month over month over month, where if this individual had a balance of $16,000 on a $16,700 credit card amount, and they've kept that balance up pretty high, that will impact your credit score. That's whether you want to repay it and get it paid down to those limits. The next one is a mortgage payment. Again, the same thing there, shows you your high credit, your balance, and so forth. So it's good to see, just so you know through when you see these things, you kind of understand what you're looking at that way. The final page of a credit report typically will show your inquiries and the analysis of those. So anytime someone pulls your credit, it'll show up here as an inquiry. That's not really good. It's not really bad. If there's a lot of inquiries and hard pulls, we refer to them, that could impact them, meaning you're out shopping for credit. You'll see that with people with car loans a lot of times. They'll go to their bank or the car dealership will pull credit, several times. That doesn't always hurt you, but it may not help you as well. But these would be all the cases, where people have looked at your credit report. Many times you'll see, if they're pre-qualified for something, a credit card, you get a thing in the mail, they've pre-qualified you, they've looked at your credit or analyzed it, it won't count against you because of that, because you didn't ask for that to happen. Really, the only inquiries that would impact your score are ones that you've asked someone to look at your credit for you. Otherwise, they wouldn't have impact. Here's where the consumer statement, if you remember on the first page, there's a little note about a consumer statement. If you have a statement, if you want to dispute something, you can always write in there, hey, I was off work, I was laid off, I had a medical issue, I could make payments, those type of things. We read them, but honestly, I'll be real honest, sometimes it's not really, what I'd rather do when I'm working with someone, and most lenders they'll talk to you. Hey, what happened here? Why is your credit score low? Here's what your score is. Can you tell me what happened? Why did in this case, they had a bankruptcy many times. They'll be like, okay, most of those are very explainable. I was off work to a medical thing for several months. I couldn't make my bill, so I had to file bankruptcy. Well, that's okay. That's what it's there for. So that's really kind of how to read that report. So when you order them from Free Credit Report, or Annual Credit Report, I should say, take a look at it, read through it. They generally will give you some guidelines as well as what you're looking at and kind of a how to take a look at it. So, but it's important that you take a look at it and then understand what's happening when you see those things. So,
and also if you do it on annualcreditreport.com, they give you a space where you can dispute it. So right now, the lender is required to reply. I don't remember the window of time, but it's a window of time the lender is required to reply, and if they don't reply, it gets removed from your credit report. So good information.
I need to get back to the slides now. Hey, it's going to take us back to the report. So perfect. So we went through kind of how to read your report, showed you all that kind of stuff. So here's some other things. Again, just some highlights and what to take a look at, kind of follows through with what we did there. Important dates to remember. Again, when you're looking at your credit report, look at the dates that they've opened. If there was delinquency showed up, match it up to your records, public records, credit requests. You want to make sure that stuff matches your records. I think that's critical that way, so that you can verify that what's shown is actually your information. It's not common, but it's not uncommon that they make errors and banks make errors and report stuff wrong. We're definitely willing to go in and correct them. So take a look at those. So if you need to dispute something, again, if you get your annual credit report, there will be information there on how to dispute it. Here's some just updates on how to do that. Now, by law, they need to respond back to you within 30 days. Okay, that's in the Fair Credit Reporting Act, some of the rules and laws we have to follow. If there's a dispute, we have a process and we have a very quick timeline in order to take a look and get that fixed for you. So, because again, if you have an issue on your credit report and it's affecting your score, it may be holding up a purchase of a car, maybe holding up a purchase of a house, it may be costing you more money. So you want to get that taken care of as quickly as possible. So each report will have a little different way, but here's one way showing here. Get the letter, get your documentation in order, and your records as well, and take a look at that. So to repair your credit, number one, don't fall for the 1-900 repair my credit ad that you hear at night at 12 o'clock at night on TV. Okay, they're just trying to get your money. The best way to repair your credit is to keep things monitored. Make sure you're looking at it, make sure it's correct, number one. Pay your bills on time and regularly. If you get behind, make sure you're discussing that with your lenders or your credit card companies. Okay. If you're having issues with, okay, I'm not showing the income, I need to pay everything, whatever, work with your lenders. There are free credit counseling services out there. And I emphasize free, that you don't need to pay for. I know there's some good resources here in the Marshfield area. You can call dial 211 for information, and they can connect you to the organizations that do that. And then make sure you're considering your financial products. So when you're repairing your credit, many times you can get into it's called a secured credit card, where you put a little money on security. It's a small credit limit. You start getting the habits of repayment appropriately, and using it appropriately. And it takes time. There's, in my estimation, there's no immediate fix to fix a poor credit score. Time, heals all wounds in that case. So It just takes time to do it, and it takes some, some responsibility. Frankly, good credit is a responsibility. Again, there's the Credit Repair Organizations Act that was established to protect your rights. Again, there are these organizations out there, and supposedly they're not supposed to engage in false advertising to deceptive practices, but buyer beware on all of those. If you have an issue, what my recommendation is to, number one, if you've got a relationship with a local bank, credit union, go in and talk to them first, and they can give you some good information on how to do that. That's probably the first place I would start, and go that route. Again, I guess I jumped ahead on the scams, but yeah, you'll see them all over the time, and this is one example. Anna was researching several of the companies. First company promises to remove bad credit information from the report. All she has to do is pay an upfront fee. Oh, well, give us $300 and we'll take all that off there. She's worried about her bad debts, but the company assures her it can scrub all negative information from her report. Company also advises her, and this is a key, not to contact the credit bureaus directly, since doing so will negatively affect the company's efforts. They can't take it off. If it's there, it's there. It's reported. People, they can't go in and say, I'm going to take that bad credit off your report. They can't do it. It's just, there's just no way to do it. So just beware of those scams. Again, try to emphasize this a little bit more. If they ask you to pay an upfront fee, if they promise to scrub all your negative information, if they promise to scrub or alter any legitimate information, if they warn you not to contact the credit bureaus, all red flags. Just, again, buyer beware. A lot of times, not only are they going to scam you on this, but they're going to ask you for some very specific information that we are trained not to give out. They're going to ask you for your name, your address, your birth date, and your social security number. Then what happens? Identity theft. And then you've got a whole nother batch of problems to deal with because they've gotten all that information from you. Plus, you've probably paid them a couple $100 to do that. So you've paid them for the pleasure of stealing your identity and trying to, use your credit that way. So just don't, there are legitimate ones. See a legitimate credit counselor, see your banker first, and get help that way. So we are seeing huge increases in fraud in all areas these days. These types of things, phishing scams, text, you name it, check scams, whatever. So just protect yourself that way. Counseling service, here's two of the most notable ones. These are both not-for-profit organizations. This information's in the packet. It'll be on the screen here. You can go out on their websites and they can give you then a list of accredited credit counseling services that they've accredited to go take a look at and get some help with it as well. Again, strategies to improve your credit. We've talked about these before. Use less than 30% of your available credit. That's a big key there. Don't max out your credit cards. Pay everything on time. If you can pay your credit card bills on, in full, do so. If not, make more than the minimum payment if you possibly can. Loans on time. Don't apply for multiple loans and credit cards at the same time. This goes back to those inquiries. If you're out there, geez, I need a credit card and I've got all these things, I'm going to apply for all of them and see what I get and what throwing the noodle against the wall and see what sticks. Don't do that. If you need a credit card, look, try to apply for one. And if you get denied, look at it, see why you got denied, because they'll send you a denial. You can get your credit report and see what it was and what the reasons were, and you can figure out from there. So, make a plan. It's always nice to have a debt management plan to reduce your debt and get those balances paid down. Yes, sir.
The payment once a month, is it possible or advantageous to pay more than once a month?
The question is it advantageous to pay more than once a month? It is, in the sense that you're paying down that balance quicker. Absolutely. The key with that, and I tell my customers, is like, hey, let's just say my payment's $500 a month. I want to cut that into $250 chunks to pay it twice a month. So you're making that full monthly payment in the month. The key there is to make sure that you're making that last half of the payment on the due date. Yeah. So you're actually paying it a little bit ahead, does that make sense?
I think somebody told me if you buy Cheetos at the gas station and then you go home and you pay them off right away.
Yeah.
Then that's going to be better than
it helps. I mean, they like to see some time, because if that happens, typically that doesn't get reported as much because you're not going to have a balance you don't know what the reporting date is. So ideally what you do is if you do that, so you go to Quick Trip and you buy something at Quick Trip, wait till you get the bill and then pay it off in full when you get the bill. And pay it right away, because that way they've gone through a billing cycle. There's typically no interest if you've paid it, you get that, and then you got another 10 or 15 days to pay it in full before there's any interest expense. So probably wait till you get that billing cycle and then pay that bill right away and do it that way. So, yep. So our summary to wrap everything up, hopefully you've gotten some understanding of, the importance of credit scores, hugely important, the scores. I was looking at just, to back up a couple, and Leisha was mentioning this with rates and so forth. I was looking at our car loan rates at Forward Bank, for instance, and there's probably your rate is based on your credit score. Can you hand me that bottom sheet right there? Let's actually grab this today because I wanted to say, because I think it really plays here. So, for instance, we have a low credit score of 640 is sort of our bottom, and Leisha was mentioning that before. So that's sort of our floor. If you get below that, we need to really look at things. So a score of 640 to 699, in this case, a 2-year loan for a new vehicle would be 9.55%. Between 700 and 779 goes from 9.55 to 7%. So 2.5 point reduction. If your score is over 780, it goes from 9.55 to 7 down to 6.5. So you have almost a 3% reduction because your score is that much higher. So it really, and that's pretty similar and consistent from organization to organization. I know in the mortgage area, they do the same thing. So that's the importance. And when you put the dollars and you do the math on that, it can make a big difference to have a good credit score. I mean, it can save you thousands of dollars over a course of a loan. I mean, new cars right now, we go up 7 years on a new car because a new truck is $75,000, or there's a lot of money out there. So having a credit score, a high credit score, certainly helps you in the long run. So that's the importance of credit scores. We've told you how to access the information. Go out there and get it every year. Put it in your calendar. I don't care. It's on your birthday every day. Every year on your birthday, you're going to go out and get your credit reports. Some anniversary date, first of the year, whatever, go get your credit report and take a look at it and understand it.
And another idea, go to annual credit report, and this quarter pull a TransUnion, next quarter pull an Equifax, next quarter pull an Experian, because then you've got 3 free credit reports over time, so you've almost got a year encompassed, and you still get to your free report.
I don't know if you heard that on the recording, but what Lisa mentions is since there's 3 agencies, you can go to annual credit report 3 times throughout the year and get each individual one. So you get your TransUnion in January, you get your Experian in May, and you get your Equifax in October or some time frame. And that way it's covering all that stuff. So make sure you get that. Really important. Identify if you do need to improve your credit, get those strategies in place and start, doing things correctly. Yes, sir.
I just had to call to get the fraud alert put on.
Okay. Yep.
A couple of days ago.
Yep.
Is it true that they send that fraud alert then to each one? Because I just called one place
Yep.
and they said they will send it to everybody.
The question was, the gentleman had a call recently to get a fraud alert put on them, and they will, that one number, I believe, will put it on all 3 reports. And that shows up then when we looked at back on the credit report, up in that alerts and special messages section, right under your demographic information, we will see that alert and say, this has been reported that way. There's also ways you can lock down your credit report and not allow anyone to get them. And you actually have to unlock them if you've been a case of fraud or whatever. And I've got some customers that, hey, we've got a transaction we need to do. I have to call them. They have to go in and unlock their credit report, and then I can pull it and then they lock it back down because they don't want people to fraudulently access their credit information.
Yeah,
So
why is that not standard?
it's pretty cumbersome for people to lock and unlock and not remember and remember to. And so it's not, from that perspective, it gets to be a cumbersome process. It's, if you know it ahead of time, it doesn't hurt you too much, but
And don't you have to unfreeze at each individual?
Yes. Yep.
So.
Yep.
you have to freeze it, each one and
freeze it.
each of the three.
Yep, each
Yeah.
report. Yep, correct.
Right.
So,
And if you do put a fraud alert on, the Fair Credit Reporting Act requires that's the one time that all three repositories have to talk to each other. So if you report it to one, they have to tell the other two.
yeah, if you report it to TransUnion, they have to spend that information down to the other two. And that's one of the laws that they have, the reporting laws. So,
And that does not, to put fraud alert does not negatively
No.
affect your
no, it shouldn't. Nope.
No, but you'll be asked a whole bunch more questions when you go to apply for a loan because we're going to get that fraud alert on that report.
Yeah.
And we're gonna ask for lots of identification from you.
We're going to make sure you're the right person,
Ah,
yeah.
okay,
Yeah, we're going to say, are you really who you are? We have a fraud alert here. Let's make sure you're not the fraudster, that you are the real person.
Yeah.
So,
And that could come with either a loan or opening a checking account or even getting
Insurance,
insurance
yeah.
or anything like that because you pull credit for so many different reasons.
Sure.
so that's kind of the end of our presentation. If there's any other questions, or we're always available, or Maida here can direct questions back to us and we can get back to you specifically if you'd like us to. So, thanks for your time and attention. Appreciate it.
Thank you.
Yeah,
Really
thanks.
is. Yeah, I actually have a secured card in the mail coming right now. so
Perfect.
It's applicable to me, I don't have any credit, but I'm just trying to start.
That's a perfect way to start it. Perfect
So I
way.
did over the intercom and I thought, I'd rather go get something to eat. But I should probably go check this out quick.
Well,
Oh,
thanks for
appreciate
joining
it.
us.
Yeah,
Well,
thank you very much.
Yeah, thank you guys for joining us tonight. I do want to mention this is recorded and available on our website, on our YouTube page, and on Facebook. If you have questions about fraud, scams, we did do a program yesterday on identity theft protection. That will be available recorded on our website for about a month. We will be taking it down after a month. So if you've got more questions about, catching fraud or doing credit freezes or things like that, you can find that information there. Otherwise, thank you all for joining us. I'm going to go ahead and close out this and we will go from here. Thank you guys.
Absolutely.